Earnings in less than 2 weeks. Alphabet on the 29th, Microsoft on the 30th. That's Super Bowl week. How are you thinking about this now as we begin the show talking about the big, broad rally? And we're wondering what we're really supposed to do in terms of strategy from here. Well, are we going to be reminded in 2 weeks that we need to continue to put money into this sector and think that it's going to resume its leadership role? I don't know if it'll resume its leadership role, but they're going to be amazing quarters, I think, across the board. It's all about expectations, though, right? I mean, Apple is up 37% since May. It now trades at 36 times forward estimates. I'm not so sure the iPhone 16 is going to be blockbusters. I do think AI will be blockbusters, but maybe in a couple of quarters. So you either believe in the super cycle or not. And I'm not sure you're going to see it this quarter. But, you know, the checks from China are coming in good, and the comparisons are very good. What I do find really interesting, Scott, is Amazon. We talked about this a couple of weeks ago. It's cheaper than Apple. Right? And the stock is only up 1.9% since last quarter versus the NASDAQ up 7%. So in other words, the expectations are very low because people are concerned about the profitability and higher costs. But AWS and advertising are going to be great. And those are higher margin businesses for the company. So I think you are going to see better profitability. And that's the one. If we continue to see it kind of just lag here, I might add more to it. That underperformance on Amazon is why an analyst such as Scott Devitt over at Wedbush says the risk reward is attractive now, right? There had to be like 4, 5, 6 negative calls on Amazon over the last few weeks. That it was in a tactically dangerous place. So optimism kind of waned, and now maybe that has cleared the bar. For the earnings are coming up, which he says, Devitt does, that the risk reward's more attractive now. What do you think, Jace?
So as it relates to Amazon, I think about the retail business, right? So a lot of the calls have been about the retail business struggling some. But to Steph's point, we saw a re-acceleration in AWS. That is the profit center for the business. It could be its own business as a standalone company. So I think there is continued upside. There's a little bit of concern for me at Walmart and what they're doing in the cloud business and their market share pull away from the retail business from Amazon. But I just think, again, if I'm similar to Netflix, when I think about Amazon and all the levers they have to pull additional to their advertising business, I like the story that they have to offer. You sold a covered call.
We love this story long-term in our growth strategy, but we know how much they're spending, and they're spending a lot. So we think that this quarter might not be the one that pulls them up out of the underperformance level, but it could give you an opportunity to get in. We sold a call last week on Monday. We bought it back on Tuesday. We sold a 195. We bought it back, sold a 192. It expires next Friday. But I think that this is a position that we're going to own long term. It's on half of the Amazon position, and if it gets called at 192, there'll be some volatility. There'll be some air pockets between now and the end of the year. We'll buy it back. I love the story. The AWS margins are 33%. Advertising's 50. I know. That's why I say, like, the mix is going to help over the long term. Is it going to show up this next quarter? Maybe not. But the expectations are really low.